illusions and wick fills. Now, in the previous video, we spoke about these zones over here. We call them danger zones because we want to be careful. If we're in a trade, price can normally respect these areas and bounce off of it. These little mid areas as well too. Price can respect those as well. So you want to be careful about those areas. Now, the question is why and how. So why does this happen? And then how can we use this information to our advantage? So the reason why it happens is because in the market, you have certain areas where the price would have a hard time breaking. And the reason why, it's almost as if it's a memory spot. So you have the big dogs, big traders in the market. They realized that whenever price was at a certain area, the market would really respect it. And then you start to get buyers, I should say, in this area that's thinking that the price is going to go up. But the big dogs in the market know, hey, well, this is an area that's respected, a zone that's respected, and then boom, start to make some money going down. And so more or less, that's the reason why it happens. Okay. Of course, there's so many other factors, but pretty much this is an area that the sellers like. So they hit sell in that area without complicating things. I know persons that have done research and then read there's so many different things with banks and institutions. Trust me, I know and I get it, but this isn't the course for that. It's all about understanding it, simply applying it, knowing what to do and what not to do, how to earn your profit and how to get out of the trade, and do it consistently over and over and over. So for the most part, this is an area where the sellers like the price. This is more or less an area where the buyers like the price. Okay, so how can we use this information to our advantage? Well, remember earlier I had told you guys that there are certain times when you should look into trading certain pairs in the market. So for example, this is GBP USD. And with GBP USD, I mentioned that it's pretty good to trade GBP USD pre-London, during London, and then right before New York opens, because once New York opens, then the US dollar currency is going to be affected as well too. So here's how we can use this information to our advantage. The reason why I love the 4-hour time frame is because I don't really have much candles to focus on. So I have like about 6 candles between my session break lines. Now, if I'm only trading pre-London and London open up until, I guess, New York, up until New York opens, then I really only need to concentrate on 3 candles more or less, right? So let's go over here. So the 3 candles that I would need to focus on would be the 2100 candle, the 0100 candle, and also the 0500 candle. So these 3 right here, 1, 2, 3. These are the candles that I need to be, these are the only candles that I really need to be interested in. Now, here's how it works. So I'm going to remove the cross icon because it could get a little bit distracting. So let me change this to the arrow icon. Okay. So the reason why I'm concerned about the 2100 candle is because this is going to give me some information that I need. So I call this my investigation candle. So I'm interested in trading at pre-London and London open. So around, 0130, 0100, and then 0300. Around that time, I'm interested, in getting involved in the market because I know that's when we have some volume. And this candle over here tells me a lot about what I need to expect from this candle over here that's going to be printing in real time. So this candle here is showing me that we closed bullish, but we closed bullish kind of weak. We closed bullish kind of weak. Based on previous data, I know that this area here is what? A danger zone. This is an area that price normally gets respected. And then the sellers go ahead and start to make their push down, or the bears start to make their push down. So if you come over here, You're like, okay, 2100. This is a danger zone, so to speak. Okay, gotcha. Now, what can I expect from this candle here, 0100? Now, I want you to pay attention, guys, because this is very, 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 very important. Remember, I told you earlier that there's always the hunter and the hunted. Well, the way that that happens is that you notice that we have a bullish movement here. So to the inexperienced trader, guess what he's expecting on a lower time frame? Yeah, he's expecting for price to go up because he thinks that it's probably going to go up forever. But what do we know as experienced traders and all the information that you receive thus far on this course? We realize that we need to be on the side of the big dogs. We trade with them. We don't trade against them. We trade with them. So if we know that in order for the sellers to make money, we need a lot of buy positions, wouldn't it be wise to create an illusion? Wouldn't it be wise to create an illusion to make it seem as if, hey, price is going up, you better go ahead and press buy before you miss it? So this is what I like to call the illusion. Now, mind you, that may not be what's happening. I don't want to say that there's somebody, pressing the button for the illusion and then making it go back down. No, but this is just the way that I like to think about it because it's so much easier for me to comprehend so that I don't make dumb decisions. Again, everything is about psychology. Everything. So for me, psychologically, I'm like, I'm not going to fall for the trap. This right here is an area where price is normally respected, and I'm on a high time frame. So normally price is going to be respected around here. But I need to know when will the drop happen. So notice this. I'm waiting on the illusion. The illusion is, let's see if price is going to go up here and then start to make its way back down. Now, mind you, this is a 4-hour candle. This is a long time. This is a 4-hour candle. So sometimes I may not get in on the trade on the 0100 candle because as I'm watching it print, it may not do what I want it to do. So I may have to get in on the 0500 candle, again, trading pre-London and London. So how does it work? Here's the illusion. This wick right over here. This is the illusion. But now, in order for me to see if the move is going to continue down or continually push down, I need to not only see an illusion, but I also need to see a wick fill. A wick fill. Now, what does this wick fill mean? This wick fill here on a lower time frame over here, this is the wick, right? I'm interested in seeing if the price is going to continue to push down, 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 closer to this area with some power. And we're going to get into the lower time frames in the refocus strategy that's coming up in a bit. But I just want to show you what to look for in this area. So you notice that this right here was the illusion. Great. That's one confluence. Now we need to wait to see if this wick is going to be filled, because what's this wick indicating? This wick is indicating that price was down here at one point, but in order for the price to continue to go down, we need what? Lower lows and lower highs. So on a lower time frame, this is what we'd be looking out for. We'd be looking to see if price is going to continue to break this area right over here. Break this area right over here and continue down. Now you notice that this area right here was rejected, and so this here more or less was a fake out. And again, we'll get into that on the lower time frame. So this right here was a fake out. It's easy to identify these fake outs on a lower time frame, especially if you know what you're looking for in this in the way that I'm teaching it. This area right here is an area that we need to see if price is going to continue to break it with some power. So on this 0100 candle, we don't have much evidence to say that price is going to continue down. So what do we have to do? We now have to wait. So what are we waiting for? We're waiting on the same exact thing. Guys, I can't stress how important this is. We're waiting on the same exact thing. We're now waiting on the illusion again right? So price came down here, boom. We have a lot of buyers, but boom, the sell comes down. Price closes up here. On the lower time frame, it looks like, oh wow, this was a heavy rejection, so I'm guessing price may continue to go up. The price now closes here, the candle closes here, start over here, and what happened? We have another illusion. See, once we see the illusion, we now start to get excited, because this is what we want to see. In order for us to make money as sellers, we need buyers. So here we go. So we have the illusion, and now we're waiting on the wick fill. So what we're doing is we're setting our alerts, and we'll get into that. We're setting our alerts somewhere down here so that we can be interested and monitor on a lower time frame to see when it's time to get into the trade. And as we go ahead and we monitor this, it's around our time 0500 or whichever time this breaks. We can't see it from here, but on a lower time frame we can see the exact time that this area is broken, and then the price then starts to go ahead and move all the way down, move all the way down, move all the way down. Now, you now being experienced traders, because you're so far in this lesson, you're now on module 4, you being experienced traders, will the trade continue to go down forever? No, it won't. So how do we know when we should be interested in removing profits out of the trade, or maybe taking all of the profits out of the trade? This was the reason why in the previous lesson we drew this area right here about structure. Right? You guys see how it works now? I could see you smiling. I could see it all making sense now. I could see that this right here was an aha moment for you, because you now understood that, okay, this is the reason why I'm in profit, and then price comes down and then it bounces back up, and I'm like, wow, I was in profit. I should have taken some of the money out of the trade, or I should have just removed all of my positions out of the trade. This is why these areas are so important, guys. Super, super, super important. All right? Because we now know when to start to remove positions out of the trade, or when to come out of the trade completely. So we're now in the trade. We got all of our confluences, and the price continued to go down and go down and go down and go down and go down. And so right around this area, we either move our stop loss to this area, or we remove our positions out of this area. And if we have our stop loss here, you notice what would have happened. Price would have continued down this way. This would have now been 9 o'clock. Remember, this is a 4-hour candle. This would have been 9 o'clock. The price would have moved up here in this area here, and it would have taken us out of the trade. All right, and that's okay. We're okay with 25 pips. That's pretty good. We never gave anything back to the market. But how did it all start? Remember, the illusion and the wick fill. The illusion is critical. Now, all the time, you may not get the illusion, because sometimes you have candles that are closing during news events, and let's just say it's 8 o'clock, and let's just say it's let's say we have this candle here at 0100, and at 0100 we're expecting a news event to come out at 0200. So let's just say once this candle closes here, once the candle closes, we don't have much activity for 0100, so we don't really get a move up to create an illusion. But we have a news event at 0200. You won't get this illusion, so to speak, if the news event was pretty good, or pretty bad, I should say, for the pound. Then you may have a sharp move down, and so you may be thinking, wow, I didn't receive any illusions. And that happens sometimes. Those are the trades where we're just, you know what, okay, I'll stand down. Or if you want to, you say, hey, I did my research with fundamentals. I was expecting things to go worse, and so I'm now going to protect myself by going in the trade, but probably setting a tight stop loss or something of that nature. But you now have all the weapons that you need to execute a trade successfully just based off of this information right here. So you're going to notice that sometimes in the market. You're going to notice that you may not get an illusion, but
you're going to get that wick fill, and the price is going to continue to go down. Okay, so I hope that this information sticks. If you don't get it on the first time, please re-watch this lesson over and over and over. This right here is critical, because going forward, this is the information that we're going to be using when looking to enter a trade, the illusion and the wick fill. Okay, so on the next video, we're going to now start using this information and adding to it. So our top-down analysis, and then we're going to look at these zones that we have created. And now we're going to find out how can we be more specific on finding the best time to enter the trade by going to a lower time frame. And then at the end of it all, we're going to put all of it together so you can see how we can do it from the top all the way down. So I'll see you guys in the next video.